Bloomberg Audio Studios.
Podcasts, radio, news.
So it's a beat for KKR in the first quarter against the estimates. The asset manager changed how it relays its results. Sonali Basak has the CFO in conversation. Sonali.
Thank you so much, Manus. And Rob Lewin, KKR CFO, is joining us now here at Bloomberg. And you have your profit topping estimates. You also have assets under management topping estimates. Puts you on the way to reach the goal you've laid out at KKR to reach $1 trillion worth of assets in the next 5 years. Rob, is there anything that changes here in this higher for longer environment in terms of how you meet these goals?
Sure. Well, Sonali, thank you for having me on this morning. Maybe we'll start with the headline of the day. Our quarter is a really strong quarter for us at KKR across our core financial metrics. Even more encouraging is our forward-looking indicators. And so if you look across our three core profitability measures, that's fee-related earnings, that's total operating earnings, adjusted net income, all of which on a per-share basis were up between 20 and 28% year on year. So really strong quarter in that respect. But even more encouraging is what we're seeing going forward. We raised $31 billion of capital in the quarter. It's the second consecutive quarter where we've raised over $30 billion of capital, which is actually the first time in KKR's 48-year history where we've done that in back-to-back quarters. So really bodes well for the future.
We've written a little bit here.
And then finally, and most importantly, sorry, go ahead, Sonali.
Yeah, we've written a little here about your fundraising plans here. I know you can't talk about fundraising plans publicly, but privately we know that you're on track to raise more than $1 billion here, or roughly $1 billion for an infrastructure fund. Rob, can you give us some picture here about where investors are putting money to work? Where is most of this fundraising coming from across assets?
Sure. And so the interesting thing is if you look at KKR since the beginning of 2022, we've raised about $180 billion of capital, which is a really healthy number for us. But we've been able to do that without a lot of our large flagship strategies in the market. So as we've talked about the go forward, we've talked about fundraising being able to accelerate from here. If you look at where a lot of that capital raising has been over the course of the past number of quarters, in Q1, we had a final close of $6.4 billion in our Asia infrastructure strategy. That's the largest fund by a good margin in Asia Pacific focused on infrastructure. Lots of real good tailwinds there in terms of longer term growth. A lot of capital raising across our credit franchise. That's asset-based finance. That's direct lending, leverage credit, north of $20 billion in just this quarter alone. So there's a lot of momentum for us across capital raising, and we would expect that to accelerate. What we've articulated to our investors is we believe that we could raise $300+ billion of capital over the course of the next 3 years.
How do you feel about the money not only brought in, but the money that you're spitting back out to investors? Big open question across Wall Street in terms of how quickly firms like yours can be monetizing your assets, selling them, putting them into public markets with this kind of volatility around.
Sure. The important thing to think about when you're thinking about KKR is that we have four main investing verticals. That's private equity, that's infrastructure, real estate, and credit. We are also very much a global firm. And we've got, if you look at our investment professionals, north of 50% of our investment professionals today are based outside the United States. So we are always in the market, always able to pursue different investment themes that we have in front of us. Really exciting in that respect.
Do you think, Rob, do you think that this year that investment window can stay this open? Do you think that might be pushed out into 2025 in terms of monetization opportunities with the volatility that we're seeing?
Sure. Let's maybe start on the deployment side and then I'll move to monetization. It's not what we're seeing. Our pipelines on deployment are building across the firm. We are really active in areas like infrastructure, all things digital infrastructure, so towers, fiber, data centers. If you look, we're really leaning in on the renewables, energy transition side of investing. We just completed our first climate investment in the U.S. in Q1, a business called Avantis in the solar energy storage business. Really exciting opportunities for us across all areas of infrastructure. Asset-based finance is another area where we're really leaning in as a firm. I think there's a lot of really good tailwinds for the alternative asset managers in asset-based finance, and KKR is a real market leader there with north of $50 billion of assets under management today focused on that area.
In terms of, please go ahead, monetization.
Yeah, sure. In terms of your question as it relates to monetization, again, we're starting to see pipelines build, and in just Q1, we exited a really successful investment for our firm, at least partially exited a business called AppLovin at north of 18 times multiple of money for our investors. So we are seeing real opportunities across the firm to be able to monetize. And likewise, just like we're seeing growing pipelines on deployment, we're seeing growing pipelines on the monetization side as well.
It sounds like you're trying to find opportunities or are finding opportunities regardless of this kind of higher for longer environment. It's Fed Day, Rob. How do you think about what the investment opportunity looks like with rates potentially staying at this level or not much lower?
So one of the unique things about our model, right, is we have over 200 companies that we're invested in across the globe. So it gives us a pretty good lens into what's going on from an economy standpoint. And we're seeing goods inflation come down. We're seeing shelter inflation come down. We are seeing core services inflation remain stickier. And we've been feeling this way for quite some time, and we've been able to position our portfolio to be able to address this. And so we do see interest rates coming down over time, but we don't see any cuts in 2024. We would expect the 10-year to probably come down to somewhere around 4% plus or minus, but all been very front of mind for us as we pursued investment themes. We've been focused on businesses now for some time that we feel can sustain margin in a higher cost environment. You're really seeing that play out in our portfolio, really healthy. Back to, we've driven real investment performance on behalf of our clients again this quarter and over a longer period of time, so we're quite proud of that. And back to areas where we've been leaning in, asset-based finance, infrastructure, both have a component of inflation protection baked into those asset classes.
Speak to us more about inflation here and how inflation might be impacting your portfolio companies. And we've kind of talked about this kind of potentially higher for longer inflationary environment as well. How are you thinking about investing through that?
Sure. Back to, we've got a big global diverse platform, so we're able to move capital around where we think we see the highest opportunities across the globe. As it relates to our portfolio specifically, we feel really good with the health of the overall portfolio. There's aspects of KKR's business that are going to perform better in a higher rate environment and aspects of our business that are going to perform better in a lower rate environment. The key for us, have we set up a firm where we think that we could go out-compete our competitors regardless of the environment? And we feel like we've got the toolkit inside KKR to really be able to do that.
But do you think at KKR you have to prepare here for potentially higher prices across those portfolio companies? And how do you prepare?
For sure, Sonali. Yeah, and we have. And absolutely, I think from a portfolio construction perspective, we feel really well prepared for that. But at KKR, we really have to prepare across different outcomes dynamically. You might be in an environment where interest rates are higher, or you might be in an environment where we're surprised on the inflation side and it could be lower. And so back to how we focus our teams, it's very much real time. The information we have back from our 200 plus companies inform our investment process, and I think allow us to stay really ahead of the curve, which ultimately benefits our clients with greater investment performance relative to the competitors that we're competing against in the market.
Rob, thank you so very much for your time here, and I know you have an earnings call ahead of you as well. That is Rob Lewin, CFO of KKR.